If you follow Tesla news on the stock market, you are aware that the company has experienced one of the most concerning increases in its cost per share. While 2021 was not without its challenges, the company did see an increase in its stock price. Despite some setbacks along the way, such as the shady agreement with Hertz to buy 100,000 Model 3 cars, and the rocky rollout of its self-driving software, which caused fluctuations in the stock price, experts anticipate the company making significant strides to raise its stock price in the next 5 years. Excellent news for owners of Teslas. What is the required amount of Tesla shares to become a millionaire? When is the ideal time to purchase Tesla stock? We'll respond these queries and more in today's video. Tesla is an American all-electric car manufacturer that began manufacturing in 2008. Elon Musk, the CEO of Tesla, is a visionary who has led the company to great success. Since the release of its first vehicle, the Roadster, the company and its master plan have worked extremely well, probably because they were the first to start manufacturing electric vehicles and are currently leading the electric vehicle industry. The company is doing so well that Musk is now the richest man on the planet and is expected to become even more prosperous. Musk is in charge of many other companies, but today we'll be looking at Tesla's stock and its impact on the stock market following the success of Tesla's $100,000 Roadster. Tesla and the Japanese automaker Toyota entered into a strategic partnership on January 29, 2010, when the company filed a Form S-1 with the U.S. Securities and Exchange Commission. The two companies agreed to purchase $50 million worth of Tesla stock through a private placement and work together to develop and grow electric vehicle parts and engineering support. However, the corporation didn't last as long as either party may have anticipated, and in October 2014, Toyota sold its holdings of Tesla shares. In June of 2010, Tesla Motors began its initial public offering on the National Association of Securities Dealers (NASC) platform. Tesla raised approximately $226 million when issued approximately 13,300,000 shares of its common stock to the public for $17 a share through the use of securities dealers' automated quotations. In 2013, the company's stock price dropped by 20% as a result of problems with the Model S fire, and in December of that year, it closed at $30 from $38 in August of the same year. Today, in 2022, Tesla's price per share is approximately $10.49. With a market capitalization of more than $1 trillion, Tesla was trading at about $38 per share on November 2, 2016. An investment of $1,000 would have increased by 32,500%, making it worth approximately $32,286. During the same period, the S&P 500 index would have returned 142.4%, but fortunately, it's still early. How do we know? Take a look at what ARK Invest has to say about Tesla and Tesla shares instead of listening to us. What, according to its website, is an ARK Invest? Thematic investing methods of ARK include market capitalizations, sectors, and areas to concentrate on public companies they think will be disruptive innovation leaders, enablers, and benefactors. These ideas are not related to conventional investing methods. Instead, they are intended to generate long-term growth. Cathie Woods is the CEO of ARK Invest. The corporation made a significant investment in Tesla some time ago, and now that it has sold off some of its shares, it is starting to get returns. Popular and seemingly knowledgeable, ARK Invest produced a 5-year projection for Tesla, and based on their estimates, owning Tesla stocks doesn't require a large amount of capital to turn a profit. Let's quickly review what an ARK Invest is. Remark regarding Tesla. Cathie Woods predicts that when additional production facilities in Berlin open in the next 5 years, Tesla's production capacity will double. Many experts in Germany and Austin, Texas, believe that demand for Tesla cars will only increase, particularly in China, where the electric vehicle manufacturer has seen remarkable success. The ARK investment for Tesla was estimated as of 2020, and in March 2021, after some significant events by the end of 2020, ARK Invest reviewed their values. Let's take a look at these updated values. The 5-year optimistic forecast was an incredible $15,000 per share, while the 5-year negative projection was approximately $1,500 per share. According to their Monte Carlo study, the projected value for Tesla was revised to $3,000. ARK Invest estimates that in 2025, there is a 25% possibility that Tesla will be valued at either $5,000 per share or $4,000. The Monte Carlo model has 34 inputs and incorporates 40,000 possible iterations. If Tesla is able to meet certain objectives, the price per share of the stock might increase fourfold from the present $1,000. First, the estimations for Tesla's capital efficiency were examined. These were significant improvements to ARK and Invest model. Capital market efficiency is the extent to which the present asset price accurately reflects current market knowledge. Gross margins are comparable to it. If Tesla spends $1 billion building a factory, the funds are stated on a balance sheet and depreciated over time, causing Tesla's earnings to drop by a specific amount every quarter as a result of depreciation charges. In 2020, ARK invested an estimated capital efficiency of $11,000 per unit capacity on the high end and $16,000 on the low end, but these figures have since been changed to $6,000 and $8,000, respectively, with 509,737 vehicles produced in 2019, a rise of 144,505 cars over 2018, and $1.33 billion spent on capital expenditures. Tesla's capital investment per additional vehicle produced was around $9,200. It should be noted that this calculation likely overstates the capital necessary for an incremental car because some capital expenditure is for long-term initiatives like autonomous data centers and Tesla's vertically integrated cell plant, which Tesla is known to do in secret at Tesla's Battery Day in 2020. In 2020, Tesla spent $3.16 billion on capital expenditure, meaning a capital efficiency of $10,330 in 2021, assuming a 60% increase in vehicle production. To give Tesla credit for what we believe to be higher capital efficiency, the company stated that its updated cell chemistry and manufacturing process would reduce investment costs by 75% over time. Based on these revised projections and an additional year of growth added to our model, we decreased the gross capital expenditure per car in our most recent model. Finally, a human-driven ride-hailing company might significantly increase Tesla's price target from their prior value estimate. Although ARK originally estimated that Tesla will achieve autonomous driving in 5 years, or by 2024, with a chance of 30%, ARK now projects that the likelihood will reach 50% by 2025. Since their last projection, neural networks have proven to be effective in solving a number of challenging issues that were previously believed to be intractable, increasing the possibility that robotaxis may be useful, according to ARK. If all goes according to plan, Tesla may quickly expand its robotaxi service, allocating the additional dollars to a manufacturing capacity servicing its fleet of vehicles, which now generates between 30 and 40 million miles of data daily, up from 20 million last year. Its self-governing network by 2025, given that hailing may represent for the majority of Tesla's enterprise value, and that the company is expected to experience a quadruple in stock price. What does all of this mean? By 2025, purchasing 400 shares at $440,580 in 2022 would yield a profit of around $1 million. Do you think Tesla would reach ARK's forecasted values given that Musk has been selling the majority of his Tesla shares? Even if the price may decline in the upcoming months, this might be a wonderful moment to purchase one of the best stocks in the world. Comment below.